Hello everyone, welcome to Quantsapp. Myself Vignesh. First of all, thanks everyone. Thanks for your valuable time. Thanks for joining me in this video. So today we will be discussing about how to analyze Nifty or say Bank Nifty or any specific index as such. Okay, because say for example, if you are a stock specific trader or you are an index trader, first of all we need a top down approach. Okay, even if you are going to even if you are a stock specific trader, okay, even you say some people usually prefer to trade in stock, some people prefer to trade in index. So for everything, okay, say for an index trader or a stock specific trader, a top down approach is very important. Okay, so analyzing the sector as a whole is very important before getting into a trade. Okay, so how we will be analyzing Nifty or Bank Nifty, what is the procedure and what kind of strategy we will deploy in it. Okay, that is what we are going to see. So this is a, I would say, a beginner friendly video. Okay, say for example, if you're a beginner, if you're a say a fresh starter, then at like what all data points is important, how you can analyze Nifty or Bank Nifty in a plain simple way. Okay, so first of all, before starting the video, let me tell you one thing. If you are new to Quantsapp and if you haven't installed the application yet, I would request you to install the application at the earliest. The link for installing the application is given in the description. So as soon as you install, you will be getting the benefit of 25 free tools immediately. Okay, so those 25 free tools will definitely help you to improvise your trading journey. Apart from that, as you know, Quantsapp has approximately 70 to 80 tools. So if you want to know more about the paid tools, if you want to explore them, you can definitely go and visit our video library. If you have installed the application, what you are supposed to do is just click on learn section. Under self learning, just go to video library. So what is video library? Video library is basically the banks of videos. Here you can find almost all the tools of Quantsapp, and that too we have recorded these tools in multiple languages. If you just filter it out here, you can see English, Hindi, Marathi and Tamil are the 4 languages that we have recorded the videos. Okay, so you can definitely go and explore them. There are some quality indicators which will definitely help you to improvise your trading. And while exploring these tools, if you have any query, the helpline number is given on the screen. It is quite handy. You can immediately pick up your phone and contact us anytime. We are always there for your help. Okay, so now let's get into today's topic. Okay, so first of all, say for example, if I am starting to analyze Bank Nifty or Nifty, the first data point which I am supposed to look in is, you can say, the built up. Okay, so first let me explain you the built up, like what is built up, how we will actually check the built up, and then we'll get into the data point. Okay, first let me explain you the concept. Futures built up. Okay, so in futures built up, first is long, second is long unwinding, third is short, and fourth is short covering, that is SC. Okay, so what is long unwinding, what is short, and what is short covering? This is very important and this is very basic, I would say, to start with your analysis. Okay, so when it comes to long, okay, if a particular sector or if a particular stock is under a long built up or long unwinding, how we would know? So for that we need two component. One is price and another one is open interest. Okay, with price and open interest you can gauge the built up. Okay, price over price over. Okay, so whenever price goes up, along with that open interest also goes up, we can say that a particular sector or a particular stock is having a long built up. Okay, and when it comes to long unwinding, okay, what is long unwinding? Long unwinding is, usually people have a misconception that long unwinding and short is one and the same, but that is not the case. You can say in long unwinding the price usually falls down and also the open interest falls down. Okay, say for example, if you have bought a stock at 100 rupees and it is currently trading at 120 or 125, you have already made 20-25% profit. So being a retailer, usually what we do, we usually book our profit. So when the new contracts that were opened are being closed at higher levels, the open interest is bound to drop down. Along with that, when massive selling or say profit booking happens, the price is bound to retrace. So in long unwinding, usually the price comes down and also the open interest comes down. Now what is short? In short, say for example, if you are expecting a particular counter to drop, say for example, a stock from 200 is expected to touch 150, but in that case what happens is, if you are expecting a particular counter to go down, we will usually go and short it. Okay, so in that case, a fresh short contracts are being opened, so open interest shoots up, and when new selling orders are being placed, the price is bound to go down. So price drops down and open interest shoots up. What is short covering? So, say for example, if you are expecting a particular stock to fall, say from 200 to 150, that is not going to happen overnight, correct? From 200, it might come to 180 and then it might retrace on the upside, say 185, and then again drop down to 170. Okay, so the slight retracement on the upside, say for example, if a stock is falling, it is retracing on the upside, falling. So this part, this is called short covering. Okay, so I hope this concept is clear. What is long unwinding, what is short, and what is short covering. Okay, now let's get into the home page of Quantsapp. Okay, so this is the home page of Quantsapp. Let me give you a brief overview about the home page. So if you see on the right hand side top, there are three major indices like Nifty, Fin Nifty and Bank Nifty. You can see the price change, open interest percentage, and also the major, this thing is narration, you can see. Can you check narration? So you can easily get an overall bird's eye view, like whether Nifty is having a long built up, short built up, or long unwinding is going on, whatever you can see. Apart from that, if you see, there are many fancy indicators over here like synopsis, days, high low, option chain, unusual option activity. So this will definitely help you to improvise your trading. You can install this application and explore more about it. Okay, so first let us go and check out how to check the built up. Okay, let me go to track and let me check out built up script symbol. Now what is built up script symbol? Can you see narration over here? So whatever stock you want to check, say for example, if you want to check Birlasoft, Reliance, you can go and check it out in search section. Whichever stock you want to check, you can check the built up of that particular stock, whether it is short, whether it is long, whether it is long unwinding, short covering. Here if you see, check, just now we checked, if that is a short built up, the price will go down and open interest will rise. See, in case of long, price is going up as well as open interest is going up. So if you go and check out long unwinding stocks, accordingly you will see price and open interest both dropping down. Okay, now what we are supposed to do is, what we need is go to cycle. Now what is cycle? So here if you see, the look back period is 20. So we are taking the data of past 20 days as of now. Okay, now here there is an option of reading, like long unwinding, short covering, what exactly you want to see. Now when there is long and long unwinding cycle, that is long unwinding, long unwinding. If a stock is following long and long unwinding cycle, we can say that the overall sentiment is on the bullish side. Okay, and if a particular counter is following a short and short covering cycle, we can say the overall sentiment is bearish. Okay, so now let us go and check the cycle. Let us go and check whether Bank Nifty is following a long unwinding cycle or short covering cycle or whatever. Okay, let me go to the search section and let me check out Bank Nifty. Bank Nifty. Check out Bank Nifty. Now here if you see, I cannot see any major long or long unwinding. Mostly I can see short covering, short covering, long unwinding, short covering, long, and today you can say again it is short. So overall I can see that Bank Nifty sentiment is not on the bullish side. Okay, you can say moderately bearish, or you can say it looks bearish based on the this thing, based on the built up cycle. Mostly I can see short and short covering. Okay, few longs, hardly two long unwinding, rest it is short and short covering. So with respect to this cycles, what I can see is Bank Nifty is not strong. We cannot expect any further upside based on this cycle. Okay. So the cycle is saying that the current sentiment is not on the bullish side. Now the next step, what you are supposed to do is, once you got this, simply go to open interest and check for the levels. Open interest. Okay. Now see, this is 29th August. Okay. Let me change it to Bank Nifty first. Let me plot Bank Nifty. Okay, Bank Nifty. Now, which expiry you are willing to trade? Say 4th September is the next immediate expiry. Okay, or else if you want 25th September is the monthly expiry. So, whichever expiry, say for example, as of now I am going and selecting this 4th September. Okay. Now, currently what I can see over here is Bank Nifty is trading at 51,200. The immediate strong resistance for Bank Nifty is at 51,500 and the immediate strong support is at 51,000. Okay, this is the level that I am expecting. Okay, slightly what you can see is, as per the cycles, Bank Nifty was bearish, and when I'm coming here and checking for levels, these are the levels that I can see, 51,500 and 51,000. Let us go and check what the monthly expiries looks like. In monthly expiry also, if I see, the strong resistance is at 52,000 for Bank Nifty. Okay, so for intermittent expiries, if you are trading 51,500 and you can say 51,000 is crucial level, and if you are aiming for the monthly expiry, then this is, you can say, 52,000 is what a level to watch out for, that is on the upside. And if you are asking about a decent support, I can see it somewhere around 51,000, correct? So now based on this, what kind of strategy you can plan? Okay, so let us go to the chart and check out how Bank Nifty looks on the chart. Okay. Let me plot a 1 hour chart. Okay. So, as per the data, 51,000, and then we can see an immediate support somewhere around this level. If you can see, it is 50,000 or say 50,200 levels. We can see a decent support in Bank Nifty, and on the higher end, if you see, the resistance is somewhere around 52,000. So what the data was indicating, it is somewhat similar. Now there are two options that you can go with. Okay, say for example, if you are trading the immediate expiry, that is the 4th September. Okay, so there is hardly, you can say, 5 to 6 days left for the expiry, correct? Hardly 4 to 5 days left for the expiry. So whenever you are near to the expiry, it is always preferred that you can go with credit spreads. Okay, or else if you are trading the monthly expiry, say for example, if there is more than 15 days left for the expiry, then it is preferred that you can go with debit strategies. Okay, but for the intermittent, the immediate expiry, that is on 4th September, what I can see is 51,500 and 51,000 are the levels. Okay, so what I will do is, let's go to trading, let's go to options architect. Okay, and I'll go to custom over here. Now what I will do is, what I can see, 51,500 on the higher end and 51,000 on the lower end, if I am not wrong, correct? Let us go and cross check it once again. Open interest. Let's be clear before plotting the strategies. That is 4th September, if I want to trade, or 4th September, yes, it is 51,500 and 51,000, correct? 51,500 and 51,000. So what you can do is, we can sell 51,500 and we can sell 51,000. That is, in short, we can create a short strangle. Okay, so let's say 51,500 call and 51,000 put. I will short. Okay, so clearly you can see the name of the strategy. This is a short strangle which I have deployed, currently looking at the open interest. Okay, because I am expecting that the market won't cross 51,500 and the market won't break 51,000, but you never know, this is market, we cannot gauge the dynamics, correct? So what we can do is, instead of creating a short strangle, we can convert it into a short iron condor by adding the wings, or say for example, just to protect ourselves. Say for example, if the market gives a huge momentum on either side, in this case our loss can be exorbitant, and see, our profit is like very much minimum, but when it comes to loss, the loss can be very much huge over here. So just to protect ourselves, what we will do is, say for example, I will go and add 1 or 2 strike OTM call or 1 or 2 strike OTM put. Okay, so 51,500, let's say, let me add a 51,700 call to hedge myself. Okay, 51,700 call, and I will add 50,000. Give me a second. 50,800 put. Okay, so 2 strike above and 2 strike below. So if you see, this is a short and condor strategy, just to hedge ourselves, just to protect. So I am expecting the market to stay range bound. If the market expires in this range, I'll be beneficial. Let's say I am holding it till the expiry. Okay, now if you see the maximum loss on the downside, okay, say for example, markets fall down to 48,000 or say 45,000, still I will lose only 1,000 rupees. And if you see on the upside, if the market shoots up, still I will lose only 1,000 rupees. Now my expectation is that market is going to stay between 51,500 and 51,000. If that happens, I will be making approximately 1,978. That is approximately, you can say, 2,000. So here I can easily see a reward to risk of 1.8:1. You can see approximately, I am talking 1.8, 1.7:1, which is very decent. Okay, so if you are trading with one lot, this is how your PNL is going to look like if the market expires in this range. Even if there is a big momentum, you won't end up losing huge money. But if you are trading naked, if you are going with short, if you are going with short strangle, and if the market shoots up, then there is a possibility that your loss might be huge. So just to protect that, what you can do is, you can go with this based on the current data, the built up cycle and the open interest. Okay, this is what you can create for 4th September. That is what the data is saying. Okay, so I hope you loved this video. I hope you understood how to proceed with the analysis and what kind of strategy you are supposed to deploy. Okay, so if you like this video, just like it, share, subscribe, comment, and stay tuned with us. We will see you soon again in the next video. Thanks everyone.